Hey everyone, welcome to Lazy Boy Crypto. So you may have heard about another DeFi project called Titano Finance. I'm not sure if that's how you pronounce it, but that's how I'm going to say it. Titano Finance, it's about a month old at this point, but there's two very unique things about it which sets it apart from things like Olympus DAO, Wonderland Time, Hector DAO. You don't have to stake your Titano tokens in order to receive your rebases. So all you have to do is buy Titano, and in your wallet, you will automatically receive rebases every 30 minutes. And that's it. You don't have to do anything. You don't have to stake. You don't have to connect your wallet anywhere. You will automatically receive more tokens every 30 minutes just by holding Titano in your wallet. That makes Titano kind of unique, and that's why I wanted to explore this project a little bit more. The other unique thing about Titano Finance is the APY is fixed. So unlike Wonderland and all those other protocols where the APY can fluctuate depending on how many people invest, well, with Titano, the APY is fixed at 102,000%. If you look at Olympus DAO, the APY started off very high when the project first launched, and now if you look about a year later, it's down to around 7,000%. But with Titano Finance, they claim that this is fixed, so that will never go down, and for an entire year, you can still receive 102,000% APY. Let's look into this a little bit further. And, this project does seem kind of too good to be true, especially when you're getting a fixed APY. I mean, who doesn't want that? So I did some digging, and I've come to a conclusion of what I think about Titano Finance, but let me explain first. Just remember that nothing that I say should be considered financial advice, and you should do your own research. So this is the Titano Finance website, and it claims to be the first automatic staking cryptocurrency. So, as I said, all you have to do is buy, hold, and then watch as you receive rebases every 30 minutes. It says it has 100% sustainable staking APY at 102,000%. It's designed with long-term protocol health in mind. All Titano minted for staking rewards are backed with reserve from the Treasury. A portion of the buy and sell fees help to sustain the Titano Treasury. So 5% of the trading volume is redirected to the RFV. We'll go into that in a minute. The Treasury backs the Titano tokens, which allows your Titano to increase. And this is what they have right here on their website. They say with a $1,000 investment, you could get over $1 million back at the end of the year because the 102,000% APY is fixed. But they put a disclaimer here: earnings are calculated in a scenario where the RFE sustains the rebased reward for an entire year. But they are basically saying if everything stays the same, then you can turn a $1,000 investment into $1 million investment. Now, that seems pretty good, right? Well, let's see. So Titano is on the Binance Smart Chain. Great, makes gas fees super simple, super cheap. The thing with Titano is, when you go to buy Titano tokens on PancakeSwap, you have to set your slippage to 13% when you want to buy, okay? And this is how the Treasury gets filled. This is how the rebasing rewards are able to be sustained, is by people buying Titano tokens. The Treasury is filled with these fees that people pay when they buy and sell the tokens. So 5% of the trading fees return to the liquidity, 3% of purchases and 8% of the sales go to the Treasury, and 5% go to the risk-free value. It is the risk-free value that helps sustain the staking rewards. When the risk-free value can't sustain the rewards, that's where the Treasury comes in to fill in the gap. When you go to sell Titano, you have to set slippage to at least 18%. So basically, when you're buying Titano, you're going to pay a fee of 13%, and when you sell, you're going to pay a fee of 18%. Keep this in mind when you're buying or selling to allow for those fees, and it is the fees that help to sustain these rewards. Let's look at the documentation here. So it's worth pointing out that this is not an Olympus DAO fork, but looking through this, I do have some concerns, and I think it's important for people to be aware of these things so they can make an informed decision before they invest in something like this. And I think it also opens up a dialogue where we can help each other and learn from each other and learn how to analyze things like documentation and some other things that I'll go into later to determine whether a project is in fact a scam or if it's legitimate. So let's look at this part. What is an RFV? The RFV stands for risk-free value. This parameter backs the rebase rewards and is established by the portion of trading fees accrued in the RFV address. Staking rewards, which are distributed every 30 minutes, are backed by the RFV, and this ensures the high interest rate. Okay. What is the Treasury? Well, it doesn't really give us anything here, does it? It says the Treasury is the set of the RFV in the commissions dedicated to supporting the marketing of Titano. So basically the Treasury is filled by these fees. It says on the front page, like I just mentioned, 5% of the buy fee, 8% of the sell fee goes into the Treasury. And you can look through this yourself, but as I said, you can see here when the RFV is lower than the daily return on investment, a portion of the Treasury is added to fill in the difference. So that's how the Treasury works. And here you can see the trading fees laid out. Here's your buying, here's your selling. And this tells you exactly where those fees are going. So this Treasury does concern me a little bit. When you look at something like Olympus DAO, its Treasury is filled with a basket of cryptocurrencies, including stablecoins. But with Titanofinance, the Treasury is just full of these fees that people are paying. So it does rely on people to continually buy and sell Titano to remain sustainable. I know that I invest in Strongblock, and I'm not going to say that Strongblock is good and Titano is bad when Strongblock does essentially the same thing. In order to receive your strong rewards, you're relying on other people creating nodes. That's how rewards are distributed. So Titano is very similar in that sense. And you could argue that it's self-sustaining. That means it could continue forever. As long as people keep buying and selling Titano, the Treasury will always be full, the rebase rewards will always be backed. But let me just dive a bit deeper into Titanofinance, because when I looked at this, I wasn't sure. I've been thinking about posting this video for a while, and some people can get very protective of projects that they're invested in. I didn't want to come out and say, hey, Titano is a scam, I'm not sure about it, this is all questionable, because I could be completely wrong. But I thought it was important to just highlight some of these things that have concerned me about this project, so that other people can then do some research themselves and figure out for themselves whether they want to invest or not. I think it's important to help each other out. No one wants to get rug pulled. So let's learn from each other, and if I'm wrong about any of the points I'm about to make, then I would love to be proved wrong, and I want you to tell me why I'm wrong. So please leave a comment if you disagree with anything that I'm about to say. Now, in the real world, I'm a writer. That's what I do for my day job, and I write about crypto, and the first thing that sticks out to me on the Titano website is this bit of copy right here. It is exactly the same as on the Olympus DAO website. So they have gone and copied exactly what Olympus DAO have said. Now, Metaverse Pro has also copied this text, and they have that on their website. But of course, Metaverse Pro is in fact a fork of Olympus DAO, so you can kind of forgive them for copying Olympus DAO's words. It is literally an exact copy. That's what a fork is, with some changes made after the fact. But Titano is not an Olympus DAO fork. So to me, just copying word for word something on someone else's website or another project's website, to me, that just seems like something lazy scammers would do. But that's just a very small point. Let's move on. Something else I do want to point out quickly is Titanofinance are actually paying YouTubers to review Titanofinance. Now, while this is definitely not a bad thing and it's not indicative of something that is a scam, I just am pointing it out because I want you guys to be aware that a lot of these nice things that some YouTubers are saying, they are being paid to say those things. And I know this because when I used to work at a crypto exchange and at a crypto project, I mentioned it in one of my previous videos if you want to find out which one. Sometimes I would write to YouTubers and influencers and we would negotiate the terms of the review, and I would tell them exactly what we wanted in the review. And we would pay them for this review, and then once they had finished the video, they would send us the video to review. We would suggest any changes. We would make sure that the review contained everything that we wanted, and then they would publish it. It doesn't mean that Titanofinance is a scam. I just want you to be aware that sometimes on YouTube, YouTubers are being paid to say good things about a project. And when money is involved, people will say anything that you tell them to. So just keep that in mind when you're looking at YouTube for Titanofinance information. So this right here is a paid review, and so is this one right here. By all means, watch them, learn about this project, but just keep in mind that these guys, they have been paid to say what they've said in the video. And just another small thing I wanted to point out, they have used the Certic logo here. Their audit is under review with Certic. It is pending right now, but they have published this logo already, even though they haven't gone through the audit just yet. So just because you see the Certic logo doesn't necessarily mean it's actually been audited by Certic. Titano has been audited by Solidity Finance, so let's go check out this audit. So this is the audit report from Solidity Finance, and I have read through this, and a few things kind of jumped out at me, which I want to share with you guys. So let's take a look at this. So if you remember those fees I told you about when buying and selling Titano, it says here the owner may adjust the fees to any value up to 100% at a time. In theory, this could prevent people from selling. Imagine if they increased the fee from 18% when you're trying to sell to 50%. That's going to prevent a lot of people from selling. Why would they want to pay a 50% fee and lose half of their profit? Who's to say that they wouldn't be able to increase the fee to 100%? It says they can do that at any time. They can increase the sell fee to 100%, which means that no one will be able to sell. And what happens when no one's able to sell? Well, do you remember the Squid Game token when no one could sell? The owner may withdraw all BNB and ERC20 tokens at any time. The owner may change the Treasury, risk-free value, and auto liquidity receiver address at any time. If we come here to Unicrypt, we can see that there is 52% locked liquidity. So what that means is 52% of the tokens in this liquidity pool, they cannot be moved, right? They're locked. This is a good thing. When you're researching a new project, you want to see locked liquidity. It means that the developers are then not going to, drain the liquidity pool and run away with all the tokens. Okay, so locked liquidity is a good thing. It says 52% here, which is low. Like, usually you want to see about 80% or higher. However, this doesn't concern me because about 38% of the Titano tokens have been burned. Okay, so you've got actually about a 90% total of locked or burned Titano tokens. So that's good, right? Well, let's go back to the audit and see why this kind of concerns me still. So there is initial supply of 4 billion Titano. That's how many were minted, okay? However, it says the maximum allowed supply of Titano is this number, which I don't even know how to pronounce, but it's enormous, right? And then it says authorized addresses are able to mint any number of tokens up to the maximum supply. Does this mean that the owners could authorize a new minting address, mint up to the maximum supply, whatever this number is, and then sell them, causing a huge dump? Remember, if they up the sell fee to 100% and prevent anyone from selling, they could then theoretically mint a whole bunch more tokens and sell them. I think that's a little bit concerning, but please correct me if I'm wrong. It also says down here, the owner may change the Treasury, risk-free value, and auto liquidity receiver address at any time. The owner may change the LP pair address at any time. And as I said earlier, the owner may withdraw all BNB and ERC20 tokens in the contract at any time. Well, let's just make a scenario up. So let's say they pump the price of Titano with these paid YouTuber reviews and whatever else they're doing marketing-wise. And so then the price goes up, but then they increase the sell fee to 100%, which means no one then can sell. There's no point in selling because you're not going to make any profit. Titano can take the entire profit. So then people are stuck with their Titano tokens, unable to sell. And then Titano creates a new minting address, which they're allowed to do, and then mint millions more tokens up to the maximum supply, or however many they want really. and then immediately sells them all. The addresses on the whitelist are exempt from any fees, so they can avoid the sell fee themselves. And then the price tanks from this big sell-off, and then people are still left with their worthless Titano tokens. I don't know how likely a scenario like that would be. It is all written out here in this audit summary. You could argue why are they linking to this audit on their website if that is what they plan to do? Everyone can see it. I'm not sure what to think of this. If you have any counterpoints, then please leave a comment. I think it's important for us to learn from each other so we can decipher these things and figure out what these mean. Because a lot of people, they just FOMO into projects. They don't really look at the white papers, the documentations, and the audits, and they end up losing their money when they're rugged. And just looking at Titano on Token Sniffer, it kind of analyzes projects, right? And it says it is high risk. And some of its analysis, it says, as I've mentioned, it says it has a high buy fee and a high selling fee. It says the source code contains a mint function which could potentially allow new tokens to be created and dumped. As I already mentioned, they could mint a whole bunch more new tokens, right? It says 52% has been locked, 38% burned. I'm not too concerned about this. It is still a high percentage, which is fine. But as I mentioned, when you look at the audit summary, does it really matter if 52% of the liquidity is locked up and 38% burned if they are able to mint millions more tokens? And they are allowed to change the liquidity pool receiver address at any time, and they are allowed to withdraw all tokens at any time. It says so right here. To be honest, a lot of these points are really concerning to me. I would love to know what you guys think. I still wanted to know how this automatic staking worked. I did put in a very small amount. So if you do some research and come to the conclusion that Titanofinance is actually a legitimate project and I'm full of shit, then this is how you buy Titano. Okay, so my BNB finally arrived in my wallet. It took about 10 or 15 minutes to go through, but now you can see I have 0.125 BNB. So now I can go to PancakeSwap and I can connect my wallet. And now here we want to select our token. So if you go to the Titano website, it has the contract address here, paste it in. And now, because you're going to need some BNB to pay the network fee, it will be very small, but you want to just save some back to pay that fee. So I'm going to say not the maximum. You need to type in 13% slippage. And then click add to MetaMask, add token. So now you can see I have 1,518 Titano. So now let's connect our wallet. The next rebase is in 15 seconds. So you can see the rebase just happened. And you can see my Titano has already increased 1,519.429. So it worked. It increased automatically. I didn't have to stake it. And it just happens every 30 minutes. So that's how you buy Titanofinance. I will say that about 10 days after I put in my money, I'm down about $5. I put in around 77 Canadian, and yeah, I'm down about $5. But I'd love to know what you guys think about Titanofinance. Does it seem shady to you? Does it seem legit? What do you think? Let us know, and make sure to subscribe and like this video, and I'll be back with more tutorials and project updates soon.